Hi everyone, welcome back to ASX Market Watch. Hey, thanks very much for joining me today. It's great to have you here checking out the charts and checking out the entire world. In fact, checking out the world, at least from a chartist point of view anyway. That is what we do. We check out the world from a chartist point of view and we see where the world indices are heading because we believe that 3 out of 4 stocks will follow the overall market. So if 3 out of 4 stocks are following the overall market and we know which way our index is heading, then happy days, we know which way 3 out of 4 stocks are heading as well. So guys, as usual, we're hitting the world. We've got Down Under Australia, we've got the All Ordinaries there, we've got the Dow Jones in America, we've got the FTSE in Europe, and we've got the Hang Seng in Asia. In fact, I might even check out the Shanghai Composite just because we really want to see what China's doing. You know, China is becoming a massive, it already is. It's a massive force out there and it's driving a lot of the growth in a lot of the markets. It's crazy. So it would pay to know where China's going as well. Guys, loving that. And, well, let's start with Down Under Australia because really that is the most exciting thing all week. This is the most exciting chart, absolutely without a doubt. And let me tell you why it is the most exciting chart. Simply because I was wrong, and that is what I love about it. You know why? I mean, most people would say, you know what, you're wrong. You're not supposed to like being wrong. But guys, let me be quite frank. It's been a long time since I have been wrong on this ASX Market Watch, probably about 8 or more months. Now, I mean, as good as that is, you know what, no one is right 100% of the time, and I kept telling you guys that. However, I was not really proving that theory to be correct. So, it's great that I'm wrong, and not only that, I was proven wrong because the market headed upwards. So, can't really complain. Happy days is all I have to say. Now, let me tell you exactly what happened. We've got our little mini exit, like short-term exit pattern here, which was like a lower peak, followed like basically a little zigzag pattern down. That's what we look for, and of course it had crossed, like, again, a really short-term uptrend line as well. So really basic stuff, guys. So simple. Anyone can do this stuff. However, as you can see, it did travel down for quite a few days after that. You know, maybe a few people, and again on a short-term basis, was a short-term sell signal. However, look at this, guys. This is the best part about this. Look at these little long-tailed bars where the market comes and it closes back on its highs. I'll just see if I can enlarge that a bit further again. Here we go. Check this out. How good is that? Now, obviously, guys, you can call this a lot of things. I prefer to use the term doji. It's a candlestick term from candlestick charting. I know it's not exactly a doji, but that's the terminology that I like to use, just where we have these long tails. And you know what else, guys? It's around the same level. So what does that signify to you? That signifies buyers at that level. Now that is awesome. That's all I have to say. That's fantastic. Now apart from that, obviously the next side to that story is that the market has closed above where we got our exit signal. So that basically negates that exit signal. Happy days. Obviously you'd stick to your exit signals in your stocks and you wouldn't just sell out of everything based on that. So yeah, that's what I mean. Obviously that's what you would do. I tightened a few of my stops on my stocks personally, and I did get stopped out of one because I made a mistake. And again, how good is that? You know what? Sometimes you've got to make mistakes to get to the good stuff in the markets. Everybody does it. You've just got to accept it. You've got to learn how to deal with it. And that's the best part about the market. Sometimes it's not that easy. But you know what? This is a good way to do it. If I was going to make a mistake, this is the one that I prefer to make. So that is awesome. Anyway, guys, looking at that. And you know what else? Like, I mean, it had met our targets, because our target was 4,900 on the All Ordinaries. Now, as I said like the other week, it did meet it, but it really just was so weak. It almost didn't, like it was almost as if it just did not meet the target. So now that it's heading up again, it gives it another chance to really get into our target zone. That makes me happy. That makes me, you know, I'm really looking forward to that because now we could go between 4,900 and the 5,050 that we initially, I mean, 5,000 is that big level. And again, in the other ASX market watches, 5,000 is the big resistance level. But we would still stick to our solid rules. And another good thing about this is, I know I'm getting a bit excited, but this is probably the best part about it. We now have a flatter trend line that we can use for our exit signal. So we've got support at a higher level at 4,800 again, so our support's moved up. That's an awesome thing as well. And so what we'd be looking for is support at that trend line, and that would be our flatter trend line. So now we don't have any of these short-term trend lines giving us, you know, short-term signals. We've got more of a long-term basis. Awesome stuff, guys. And again, loving that. Next, let's check out the Dow Jones, because Dow Jones, as I said last week, guys, the Dow Jones is the most beautiful chart. It is so sexy. I love it. It is so great. And why is that? I mean, really, because there is just, it's going for gold. It's going for it. And I mean, obviously, you know, we hadn't had any exit signals. Happy days there. We had predicted our targets of our initial target, 11,685. It's met that with ease. Next up, it's heading for 11,868 on the Dow Jones. And after that, we've got a bigger one, which would be over 12,000. So that is awesome. Loving the Dow Jones. And again, haven't had any exit signals, whether they be short-term or long-term on the Dow Jones. It's just in that beautiful uptrend, loving that uptrend. And obviously, if as we always say, if we're to believe 3 out of 4 stocks will follow the overall market, 3 out of 4 stocks, that's the way you want to be trading, guys, is in that uptrend. Loving the Dow Jones. So not much more to say on that at the moment. The FTSE, again, we got like a super short-term sell signal on the FTSE, which was this. See this? How we've got the. I'll just try and enlarge that. How we've got the sellers coming in over the day and pushing the market down, and it was confirmed by the next day. Now, you know, the day after that, sure, the market fell, but after that, what have we got? We've got a few different bars here that sort of negate that short-term exit signal. And again, I mean, that was on a really short-term basis. If you're looking at your solid signals, we prefer to use the trend lines, and we prefer to use the little zigzag pattern down. Now, what have we got here on the FTSE? We've got a lot of support at the trend line. I'll just try and enlarge that. Here we go. Here's that trend line. Beautiful uptrend line. Again, guys, that is just a line on a chart. So easy to do. Anyone can take a ruler and draw that line on a chart. Your 8 or 9 year old child could do that so simply. I expect that you could do it as well. But again, loving that. That's our support at 5,800. Now, also, one last thing, because we've got the previous highs here. There we go. Here's our previous high at 5,800 as well. So, guys, what happens with resistance when it's crossed? It becomes support. Exactly right. So we've crossed our resistance. Now we might expect that resistance will become support in the future. So again, that's around that 5,800 level. So I mean, you cannot complain. It's just great. It's fantastic. So again, all these things are sort of coming together, and that's where the gold really starts to happen. Now, last but not least, guys, and again, how good are the markets, man? I love this stuff so much. It's just so good, because especially with the Hang Seng, where did we call this? We called this a couple of weeks ago. We said if the market was to close above this peak, we'd expect a short-term uptrend. And look at that. That is just beautiful in Hong Kong. Loving that. Happy days. We set a target of around about basically the previous high. Around about that level, 25,000, you know, give or take a few hundred points. That's where your initial target would be. And again, if it passes that, what will we expect for the resistance to happen? We would expect for it to become support. Exactly. So that sort of stuff all ties in together. And basically the level to watch in Hong Kong is 25,000 on the Hang Seng. Just quickly in China. Now, guys, China is the one. It's not looking as sexy as the other charts. I'll just basically get rid of all those trend lines, because this is the main one that we're looking at here. It's basically been in a sort of intermediate downtrend over the last year. You know, it's gone up and down in the meantime, but the Shanghai, as we're looking at it, we really want it to break out above 29,030 for it to be in an uptrend again. So until then, Shanghai I would consider in a short-term downtrend and an intermediate-term downtrend as well, guys. So that's China. That's Shanghai. That's the capital there. So that's what we're looking at for China at the moment. Still in a short-term and a medium-term downtrend. If that may affect growth there in the resource stocks in Australia and all the things that go along with it, then so be it. But that's something that you need to be aware of. Other than that, guys, thank you again for joining me and checking out the markets. What a wonderful place it is to be, and what a wonderful pastime it is. It's just exciting, and there's a lot happening as per usual. Guys, happy training until next week. I will see you then for more ASX Market Watch, more tools that we can check out. And until then, guys, happy training. Bye for now.